Wow, this is going to be an interesting conversation. When people talk about seizing an opportunity, this was not a planned session,
Yep.
but it came into town, and I said, wow, with his wealth of knowledge, it is important that we tap into it. So,
Thank you.
can you please introduce yourself?
Okay, my name is Seun Famosinpe, simply called Seun. American clients call me Sean.
Sean, interesting.
So they've changed my name from Seun to Sean. So yeah, I'm one of principal partner and co-founder at Quadot Capital. We are a nationwide direct lender
Okay,
on real estate non-owner occupied properties, meaning properties owned by you, but you're not living there.
okay,
So that's what we do. We finance, like you find a discounted property in the market and you wanted to flip it, we fund such acquisitions and also finance rental portfolios and single family rentals.
okay.
So yes, that's what we do.
So, meaning that you are the money guy.
Yes, you
That
can call
if
me that.
someone finds a house
Yes.
that they wants to buy
Yep.
and now rent out to other people, as
Mhm.
long as they will not live in the house,
Yes.
they can approach you to get a loan to finance that kind of a transaction.
That's what we do every time.
Explain that again. You mean you're able to do a loan
Yep.
at 1.05 of
No,
what?
no, not rates.
Okay.
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 That's the DSCR ratios
Okay.
that tells us, oh, we can fund this deal, meaning one to one, meaning the client can actually they pay the loan
Okay.
almost 110% in case of a month or previous month that was going to come over that there's going to be loss of income
Okay.
from their tenants.
Okay.
We just try to assume that.
Okay.
So that's the basic minimum that we want to be 1.1. Um,
So
DSCR.
let's take a step back. I was talking about opportunity earlier on.
Yeah.
What is the importance of investing in real estate?
Okay, so like real estate is so like Grant Cardone said, he said real estate is the only asset, is the only estate that's actually real.
Okay.
So look at so many investments that you do, they're not real. But real estate is real because you can point to this property at 123 Main Street here in Nashville, Tennessee. That's my property. So it's actually real, right? And it also provides you an opportunity to earn some cash flow on a monthly basis.
Okay.
While you are doing that, the property is also accumulating some equity
Hmm.
that you can also tap into it in the future.
So mainly because of the advantages that are associated with real estate
Mhm.
that you cannot find with other kind of other investment, real estate is still a much more guaranteed investment to
Yes,
explore.
absolutely. So, but in finance, we like to say nothing is guaranteed.
Sure.
But if if you so before starting into real estate, you have to get some knowledge.
Yeah.
Thankfully today you can go on YouTube and just type whatever you want to learn, and you start reading from industry players and try to understand where do I start from.
Okay.
So it might not be rental that you want to start with. It might be wholesaling real estate properties to other third party, we call them cash buyers, the third part to the contract. Or you might start from fixing and flipping cosmetic rehabs before saying, okay, I have some liquidity now to start acquiring rentals. So it's a long time game. It's
Short
not
term
a
gain.
instant get rich quick approach.
That is very
Yeah.
important. That real estate investment, it is not an instant get rich quick
Yes.
investment.
Yes.
It is a long term game.
Yep.
So
It
that
is.
is important for you to know as a buyer there, even as a seller, that a real estate investment is not a quick money making investment. It is a long term goal. Now, before we talk about the different types of loan program that you offer, what is the what what are the criteria for somebody to be qualified to get the kind of loan that you offer?
Okay, so um, from our company model, we operate non-bank lending approach.
Okay.
So everything the banks will not do is what we do.
Okay.
In other parlance, they call it non-qualified mortgage, non-QM. So our basic criteria is credit scores and the asset quality and
Okay.
the income that that asset generates. We do not ask for W-2s. We don't ask for 1099s. We don't need tax returns. we are asset-based lenders.
Okay.
So primarily credit scores, good credit scores, and the quality of the asset in terms of rental income versus the expense profile from taxes, from insurance, from property management. We put all of this together and create that DSR ratio and
Okay.
see what ratios can we use to approve this loan.
So when you talk about credit score, is there a range of credit score that you usually look out for?
Yes, we have range, and maybe right after this program, I will send you like a rate sheet to
Okay.
see laying them side by side with credit scores.
Okay.
So typically for rental properties, we like to work with clients from 680 and above credit
Okay.
scores,
Okay.
because like I mentioned, we are non-institutional lenders, so we are backed by a Wall Street player called Loan Funder,
Okay.
and these investors are going to sell the loan 3 months or 2 months after we close for you to the primary market. And the primary market consumers, I mean, off-takers, I would say, wants to see a credit score minimum of 680.
Okay.
So but for rental, best guys with 750 and above, excellent credit, get good rate every time.
Okay.
But we can still work with 680. It's going to impact on down payment requirement. It's going to impact on the kind of property they're actually buying, and see whether it qualifies and meets our criteria.
Okay.
Yeah.
So when it comes to down payment, what is the minimum down payment that is required for this kind of loan programs?
So for rentals, 20% minimum,
Okay.
because this is an investment property. This is a property that you're going to own in your business entity. It could be an LLC, it could be a corporation. It's 20%. But I've seen 20% happening for guys with 749 credit scores and above.
Okay.
Anybody below that should prepare for 25, 30%.
Okay.
Yeah.
All right. So if you talk about the down payment requirement,
Yeah.
can you now tell us the different types of loan programs that you offer?
Okay, so I'll start with we have two products under bridge loan.
Okay.
One is the fix and flip. That is you driving around Nashville, you find a rundown property and you run your numbers. Of course, you are working with a real estate agent who understands investment properties. You analyze it together. You're working with your handyman or contractor, or if you are handy yourself, to analyze what price point am I going to offer. Then you come to us. If you are very experienced, you bring 15% down. If you are very experienced, like you've done at least 3 or 5 flips, or you own 5 rentals, we give you up to 85% LTV from us, then 15% from you.
Okay.
Of course, we fund 100% on the rehab in an escrow reimbursable approach.
Okay.
So we only reimburse you from the draws in the concession owed back based on what you've done on the site.
So basically, if somebody wants to go into flipping of a house now, that you can offer them a loan to be able to do that process,
Yes,
right?
absolutely.
All right. So if you are out there, you are interested in flipping houses, here is your guy. It will get you the loan that is required for that. So apart from funding people that want to flip houses, what other kinds of loan do you offer?
Okay, so we also do the second part of the bridge loan, the ground up construction.
Okay.
So you might be the guy, the investor out there that doesn't want to invest in old houses.
Okay.
So you want to build a new, maybe 1,200 or 1,500 square foot house for you to sell it, or for you to refinance into a permanent rental loan along the line. We can also do that for you. If you are experienced, 15% down. If you are a newbie, we need on the ground up, we need you to have done 1 or 2 ground up before you come to us on ground up. But for fix and flip, we can work with anybody that just woke up today and said they want to do it.
Okay.
We can work with a newbie, so to say, on that one.
So for people that want to start construction from the ground, maybe they found a land and they want to build an investment residential property, not a property that they will live in themselves.
No,
it must be a rental property. All right.
Or they want to flip it, they want to sell it once it's done. So it's like maybe you live in a subdivision there's some vacant lot there, and the builders have left, and now the owners are now selling those lots. So, for example, maybe your neighborhood is worth 500,000, and you bought the lot for 100,000, and you want to bid 250 into it, so that you can sell for that 400,000. We will do that because there's a value that we can look at. It's comparable that justifies our borrowing to you. But for ground up, like I said, we only work with experienced investors. At least you must have have done one ground up.
Ground up.
Yeah, because
construction.
we don't trust new investors with ground up loan.
So you don't trust new entrants into the construction except they have an experience of
Yeah.
what they have done
Yes,
before.
before. Yeah,
All
because they are easy for contractors to take undue advantage of them,
Okay.
and it could mess them up. And we try to advise them. Other players out there don't give this kind of advice. They just want the loan, but we like to advise our clients.
So I'm being mindful of our time here.
Yeah.
When it comes to people that are afraid of going into real estate investment because of the interest rate right now, what do you say to that? Or people that are thinking that, well, this is not a good time to invest into real estate. What's your take on that?
For me, I tell people that the best time to buy real estate is now.
The best time to buy real estate is now, not tomorrow.
Not tomorrow.
And why?
Because you're buying into equity from any time you're buying it. So one thing I like to tell investors is be critical of the interest rate, yes. Look at it with your numbers. If you have your own spreadsheet, look at it. But look at it from the fact that if you don't buy today and the rate goes up tomorrow, what have you lost and what have you gained? So for me, I tell clients, if the numbers make sense, if I have a good property renting for 1,500 and my mortgage is only 700, and I'm putting another 5% for property management and all of those expenses, and I still have maybe $500 to keep as cash flow every month, and I'm not the one paying the mortgage, the tenant is paying the mortgage, what's stopping me? Yeah, because you keep waiting for interest rate to drop, it doesn't happen overnight.
So what about, let me play the devil's advocate here.
Yeah.
Let's say, interest rate actually drop.
Yep.
What is, how would they handle such kind of a situation?
So when interest rate drops, they can refinance. And of course, when interest rate also drops, property prices goes up. So if you don't buy now, you could be buying very expensive in the future. So why not buy today?
That is
as long as the numbers make sense.
That is what a lot of people don't understand. That thinking that, well, I will wait when interest rate comes down, then I will buy. But usually, whenever interest rate goes down, the value of the property also goes up. And it's a basic economic principle.
Yep.
When interest rate goes down, demand will be high. And when demand is high,
prices go up.
Prices goes
basic economics. So this is where we educate clients.
Okay.
That as long as the numbers make sense, as long as my rental income pays the mortgage and still leaves me something, I'll go into it. Because the next 3 years, run the numbers on that property, you may have acquired 100,000 plus in equity. And you can now rinse and repeat. Correct. That's why John Green did the book on BRRR strategy, which is you buy real estate, you rehab it, you rent it out, you refinance, and you repeat. So you buy it for 100,000, you put 70,000 into it. Before you rent it out, you look at the numbers in the area. So you bought 100,000, you put 50,000, you're already 150. But the neighborhood is $300,000 in ARV. So you already have 150,000 in equity. Then you look at the rental comps of the area, you put a tenant into it for 2,500 or 3,000. Maybe it satisfies the 1% rule. And you have a fantastic credit. You can come back to us and refinance that same property and pull out like $100,000 again and repeat the process. So that's why they say buy, rehab, rent, refinance it, and repeat. So from one asset, you can give back to 10 assets in 1 year.
In just 1 year?
1 year. As long as you are very fast with what you are doing, you're not looking for the big rehabs, you're just doing something very cosmetic, and you're quickly turning over the properties.
Interesting.
But like I said, all of this comes with education. So you need to first educate yourself. You need to harm yourself with a team. Number one person you need in your team is a real estate agent who understands your vision and who can also guide you along the line. You can wake up mornings, Monday to Friday, go to Lowe's, Home Depot, and try to familiarize yourself with subcontractors and try to interview them. So you do a lot of Starbucks meeting to check people to see, can I work with this person? Does their charisma aligns with me? So you need a lot of these people to be in your team. You need a CPA that is knowledgeable with real estate transactions who's going to help you put all of your numbers together, your bookkeeping, and show you how real estate saves you a lot from tax expense.
That's what a lot of people don't realize too. Yeah. The advantages that comes from tax saving when you invest into real estate.
It's a lot. It's huge. It's huge. Even when you're driving yourself as a contractor to that property, it's a tax deductible expense. can write off.
Earlier on, we were talking about, and we'll wrap up on this note, on the fact that, so before that, there's another question on my mind. Do you also offer loan to churches?
Absolutely. We do commercial loans
Okay.
to churches, faith-based organizations. So over the years, we've realized it's very tough to finance churches. Some churches also have in code, bastardized the process with the banks and taking undue advantage of those little down payments and all of that they require because they are a non-for-profit and they're also a faith-based organizations. So now it's becoming increasingly difficult for church to get loans. So we, leveraging our experience working in the bank here in the United States and now owning a commercial advocacy company doing loans, we are able to present our clients to the banks and credit unions in a way that they like to be seen. So those are not our direct balance sheet loans. We are advocates when it comes to church loans. Okay. When it comes to fix and free, when it comes to rentals, when it comes to ground up, those are on our balance sheet directly. Awesome. Yeah. Awesome. Well, we come with a lot of expertise on church loans. Anyway, we've had a lot of success in that.
Well, thank you so much for your time.
Thank you.
I really appreciate making the time. If you are interested in all of the things that we've heard about, how to get loan for your flips, for a rental property that you want to buy, I will provide his information